Let me talk about an important concept of double trap. Kindly go through my different videos I have posted recently, and you will know that our high probability setup formed at key entry point when the market is going down, we look for second entry sort. Okay, and how we count entries, there are separate videos for that also. Please go through them. Let me show an important point. What I am trying to show you here is the double trap. The market was going down. This is swing low. Okay, our count gets reset here for shorts. Okay, then this red bar broke the low of previous bar. So this is one entry short, first entry short. Okay, this is first entry short. Then this bar broke low of previous bar. So this is second entry short, but this is bullish bar. So it did not match with our criteria of entering here. Okay, but we were looking for second entry shorts in the market was going down. Okay, and this second entry short formed above 21 EMA. There is a gap. Okay, so what we can do, we can look for lower high. But what happened here, the market went up till this level and formed a double top. After forming double top, it went down. What you could have done in such scenario, this is double trap bar, because let me explain it to you why it is double trap. Because it trapped bears as well as bulls. That's why it is named a double trap. It usually gives very good return. We were expecting a downward move to continue. The trend was bearish. Okay. Suppose I took second entry short entry here. Okay. Previously, this was support and that became resistance. Okay. So if I took second entry short trade here, this will almost take my stop loss, because I will put my stop loss 1 or 2 pip above this bar when I'm going short. Okay. So this is double trap bar. It trapped me, the bears who was hoping that the market will fall, but the bulls are also there who are thinking that the market is going up. The secondary short will fail, but then suddenly a red bar comes up which breaks the low of the previous bar. It confirms that the second entry short is valid. Okay. If there was any bar forming which closed above this bar, then second entry short would have been invalidated. So the signal bar is bullish, the context is very much bearish. Okay, so one can enter here after this double trap form, or this is called double trap. This bar is double trap. All the bulls and all the bears were trapped. So this is double trap bar, and you can enter at the bottom of this bar. Let us see how much money one could have made. The risk much only of 20 points, and the reward is massive, 150 points almost. Okay, Let us see another example. The market is coming down. I will go for second entry short. This is first entry short. This bar broke the previous bar's low, and then this bar is second entry short because this doji bar broke the low of this bar. Okay, and formed near 21 EMA. Here also you see the double top formation. Okay, this don't wait for perfect double top. It usually does not form. You will have to take into consideration this type of double top also. Okay, the price slightly went up above this level and then reversed back and came below 21 EMA. So one could have taken this second entry short and entered when the second bar completed, which confirmed the second entry short. Okay, the risk was here of about 34 points, and the reward, if you waited till last, it was almost about 150 points, 5 times. Okay, let us move to other example. Here the price is moving up, so I will be looking for second entry long. This is first entry long because the next bar broke the high of previous bar. This is first entry long and this is second entry long. Even if you are not drawing the trend line and you get any entry near 21 EMA, that is high probability setup. Let us see here what is happening. The price is coming down. So I am looking for second entry short. This is first entry short. This bar broke the low of the previous bar. Okay. This is first entry short. Okay. This red bar is first entry short. Then the market moved up. This was the first bullish leg. This is the second bullish leg. But when this bar broke the low of the previous bar, the bullish leg was second bullish leg was over. This is second entry short. Okay. We waited for this. I wanted this to be formed. Okay. Let us see. You can definitely go second entry short here. The second bar. Okay. You can go short here or you can wait for lower high confirmation or again formation of second entry short. The another second entry short forming here. This is first entry short. Then a small doji bar. Second entry short. Okay. This is in range. This is sideways. Actually, it was a breakout which failed and then it came back again in this range and finally it broke the range. Okay. See, there is another second entry short. First entry short. This bar, this hammer broke the low of the previous bar and then the spin bar. This is second entry short because the next bar broke the low of this one. So let us see what happened. Suppose someone waited and entered here. The risk was too much, about 68 points. Okay, and we had already covered a lot of ground, so it was not worth going for. It was a risky trade. For scalpers, they could have entered just after the second entry short formation started and they could have scalped and got out. This is another second entry short, first entry short, and then second entry short, while formation of double top. This was a very good entry. Okay, then there was third touch, and this is one entry short, and this is second entry short. While here third touch, it's like a triple top. It's better than double top. It's a triple top. This was a very good entry for short. The market was about to get closed. You could have skipped this one. Let us see other example. The market is going up. So what I will be looking for? I will be looking for second entry long, not short. Okay. This is first entry long because this bar broke the high of the previous red bar. Okay. This bar broke the high of the previous red bar. Then see what happens. This big bar, though it's looking bearish, this bar broke the high of previous bar, red bar. So it is second entry long. The color of the bar is not important. Here the context was market was bullish. Okay, the price was moving up. Okay, here it was taking support on a trend line and second entry long form. It was a risky trade. It was below 21 EMA and one could have skipped this one. Let us see other example. This is a new swing high for going long. This is the first entry long. This bar broke the high of previous bar. Then this is the second entry long. This inside bar, this there is inside bar. This bar went below that bar and then went up. This is second entry long. One could have entered here, but it is below 21 EMA. It is better to look for entry above 21 EMA. Since it's below 21 EMA, I will look for failure of second entry short. This is first entry short because I'm looking to go long. Okay, first entry short. This is second entry short. Why I'm looking to go long? Because second entry long form it was below 21 EMA and the price has been bullish from the morning. This is second entry short. Let's see this bar. This bar is not accepting the second entry short, and this huge bar nullified the effect of second entry short. This is failed second entry short. Okay, so this is one signal that you can go long. Okay, but this was a huge bar. You definitely need to wait for the pullback. Market pulled back, and then this bar could have served the purpose. Let us see some other examples. Here the market was showing sign of weakness. Okay, this is swing low. I will be looking for second entry short because the market is bearish. This is first entry short. It's green bar because the next bar, red bar, broke the low of this green bar. Okay. Then this is second entry short. This green bar because next bar, sorry, the red bar is the second entry short because the doji bar broke the low of this red bar. You can see it is on trend line near 21 EMA, so it's a good entry. But the previous bar was the mother bar and this was the inside bar. The inside bar and the engulfing bar are two bars. When they form the signal bar, it is you can avoid them depending upon the context. See what happened here. There was an attempt to form a new low after this low formation, but it went toward 21 EMA and then got rejected. Okay, let us count from here. This is the first entry short, and then this is second entry short. After two times bulls have tried to move the price up, they have failed here, and then the price moved down. See here what happens. There is first entry short. This bar broke the low of previous bar, and this bar is second entry short. This bar broke the low of this bar, but at the same moment it failed. This failed second entry short. So it moves. It had trapped the bears here, and it is near 21 EMA. So this is high probability setup for going long. Bears tried first attempt, second attempt, they failed both the time. This bar proved that they have failed. This bar closed above signal bar of second entry short. Okay, so you could have went long here. These are some of the examples. I will be covering other examples in another video. Thank you.